Welcome everyone, and thank you for joining us for today's webinar with partnership with BDO Chartered Accountants and Advisors and Bonard Lawson. My name is Lara Malab and I'm the Director of the Business Development and Marketing at Rock Icc. So today's webinar is on economic substance regulations, requirements, and solutions. Actually, we have a very good registration number, and I'm delighted to say that this is a very interesting topic for the audience. So I hope you find this the webinar informative and useful. Just a few remarks before we get started. This webinar is scheduled for an hour, so we have presentation slides that are covered by our speakers, and we'll end it with a Q&A session. So if you have any questions during the presentation, please type them in the Q&A box in your Zoom control panel, and I'll bring them up at the end of the session. In case we are a bit tight on time, we will address your questions or we answer your questions later following the webinar. This webinar is also being recorded and will be shared with you along with the presentation slides later. We will also post it on our website for those who are unable to attend it. So the agenda of the webinar is, in today's webinar, we'll be covering the following topics. So we'll discuss the economic substance guidelines, filings, periods, exemptions, adequacy, and required actions. We'll also discuss some of the lessons learned and appeal procedures. We have case studies in relation to the economic substance test. I'm delighted to welcome our speakers for today. Alan Bugard, our registrar. Alan has over 20 years experience working in the financial service industry. Before he joined Rock Icc in 2014, he was the Registrar of Companies and Registrar of Intellectual Property of Guernsey Registry. He has held previous positions as Managing Director of Skipton International and was the former Chairman of the Association of Guernsey Banks and former Deputy Chairman of the Guernsey International Business Associations. We also have Brian from BDO Chartered Accountants and Advisors. Brian has over 30 years of tax experience. He's a consultant partner to the UAE firm assisting with tax technical matters and on major client businesses. The business development projects. Brian and his team advise clients on several matters, including the UAE VAT implementation, and has been involved with establishing new service lines for BDO in response to the new regulations in the region, including compliance services in connection with economic substance regulations. Brian is also joined by Verona, his colleague, and I will leave him to introduce her later. Alejandra S. Morris is a Swiss attorney and senior associate of Bonard Lawson, Dubai branch in the private client services department. Her main areas of expertise include corporate law, wealth, international succession planning. Alejandra advises clients on structuring their businesses to comply with domestic and international regulations, including on economic substance regulations matters, establishing proper corporate governance strategies and monitoring systems, and ensuring the transmission of family businesses from generation to another. So welcome again our speakers. So before I pass over to Alan, just a quick introduction to Rock Icc. I promise you it won't take long. I'll leave more time for you to learn more about the subject. Rock Icc is, for those who are still not familiar with Rock Icc, is a corporate registry responsible for the registration of international business companies and foundations. It's actually one of the fastest growing government-owned corporate registries, and we're delighted to mention that even last year, with all the challenges that all the world faced from the pandemic, the global pandemic, our numbers were growing, and it continued to grow this year in Q1. So this is a clear indication that the products and services that we offer at Rock Icc are very popular. We pride ourselves that we are located in the United Arab Emirates, and this is one of the reasons for being the jurisdiction being very attractive for the clients, because it offers a variety of solutions in terms of onshore, offshore, and free zone company formations. This is the main importance of related to this topic is that the UAE has all what it needs to meet the economic substance requirements, which is the main topic of this webinar. So it has all the professionals, human capital, office spaces, and etc. To satisfy the economic substance requirements. We have seen an undeniable shift towards more reputable jurisdictions, and mainly other offshore centers are facing lots of scrutiny and increasingly being placed on the blacklist or the watch list with serious reputational and operational consequences, mainly in relation to that they are unable to meet the economic substance requirements. And again, there are lots of other concerns, including the public registry of UBOs that some of the offshore centers are implementing or in the process of implementing it. So this is again a major concern for the clients. Rock Icc companies are best suited for either corporate or private wealth. For corporate, there are lots of different structures that the client can use for, whether for trading activities or consultancy businesses, for structuring their assets, in holding structures and special purpose vehicles for financing transactions. And of course, the main advantage is that the client can re-domicile their entities from other jurisdictions to Rock Icc. For private wealth, mainly for succession and wealth management, for succession planning and wealth management, especially that we've introduced foundations, and we have many other options, including family offices at Rock Icc. Mainly this type of structure is good for, as I mentioned, succession planning, for asset protection, for ownership of real estate and other assets, and of course for international tax planning. Just a quick summary to wrap up. The main benefits of Rock Icc is that it has a common law regulations with the access to common law courts at DIFC and at DGM, with variety of corporate and legal features that the client and advisors can benefit from. We're located in a wide listed jurisdiction with all the benefits that UAE has as a real economy and the quality of life, the accessibility, especially when it comes to ESR and attending board meetings. The main essential one is also, again, the tax benefits that the UAE has and the double taxation treaty network that they can access through this jurisdiction. Again, mentioning ESR requirements and the ability to meet the ESR through through UAE as a jurisdiction, and was maintaining. We accept migration and continuation of various jurisdictions from various jurisdictions to Rock Icc, was maintaining confidentiality of information in relation to the client. Now, without further ado, I'm going to pass over to Alan, who will cover the economic substance slides.
Thank you, Laura, and good morning, everybody. Thank you very much for joining us. I'm delighted to have Alexander, Verona, and Brian with us, and grateful to them for their time and, more importantly, their expertise. A quick run through of some of the things we've noticed in relation to ESR from a Rock Icc perspective. Not least of all, that many Rock Icc companies are out of scope. And the next slide, when we get onto it, lists the activities. I know you're familiar with the names of the activities, but what we're encouraging you to do is also look at the detail of the activities. Sorry, Lara, that was me working further forward. Can we just go back a second? One of the points that we've already mentioned, Lara's mentioned the fact that the ESR infrastructure can be met in Rock Icc. And one of the points I'd like to make in relation to redomiciliation is the reporting period starts from when the company arrives in the UAE. So if you've got a company that is looking to meet economic substance that's currently based in another jurisdiction, it will be looked at in the UAE from the time of its arrival. We'll mention later in the slides the various options, but this just gives you an overview of why we think the UAE is the right jurisdiction for many clients. Thank you. So yes, going on to those definitions. Of course, banking, insurance, investment funds speaks for itself, but the importance of looking into the detail of the definitions of ESR is highlighted by something like lease finance, because, for example, it doesn't apply to real estate. And so people see the term lease and think, oh, that must include property. And then when you look into the detail of it, it doesn't. Distribution and service center businesses, one of the confusions we found there is that it only relates to intra-group activity. And if you're dealing with third parties, you're not in scope. So really important that when you're considering the relevant activity of each company, you look at the detail of what they're actually doing. And in the guidance, there's reference to something called substance over form, which really talks about not what it looks as though they're doing, but what they're actually doing. So next slide, Laura, thanks. You'll hear quite a few times this morning that the best source of reference is the ministry's website. It's got an awful lot of detail in there, and I appreciate that that can be very daunting, but that information is also very well laid out and very well segmented, and the answers to your questions are generally to be found there. That doesn't mean to say that you're not going to need professional advice, and we know Alejandra, Verona and Brian have been very busy providing that advice. Very important that you seek that professional advice where there is uncertainty. Thank you. We've just sent out this reminder to everybody to really emphasize the point that ESR is an ongoing thing. It isn't something that we dealt with last year, had to file by the end of the year, and that was it, we're done. We're continuously needing to review the companies to see whether they fall into the notification periods or the reporting periods. And don't be surprised if you're seeing this filing from us regularly, updated with the relevant dates, because we want to constantly remind people of the need to look at the company, look at the reporting periods, and make the appropriate filings. Thank you. One thing we've emphasized is the fact that we know a lot of people did a lot of work to file with Rock Icc earlier last year, and then the ministry site came online and there was a requirement to file again. So very important that companies don't feel that because they filed with Rock Icc, they've met their obligations. And we've got quite a few companies that filed with us to tell us that they had ESR, but haven't filed with the ministry. Now, those companies may well have decided since they made their original filing with Rock Icc, they've revisited the guidance and they've realized that they don't have economic substance requirements, in which case they weren't obliged to file with the ministry. And that's fine. But there will be follow-ups on these, and it may be that the ministry will actually levy penalties on companies that had previously filed that didn't refile, not realizing that the company's situation or circumstances have changed. So it is important to consider whether or not the company has to file. We also saw thousands of filings that were made for companies that didn't need to file, and we understand why they would want to do that. They were concerns they might get hit by a penalty, so they filed just in case. And nothing really wrong with that, but obviously it is effectively unnecessary. But please do consider the importance of making those filings and making them on time. We know that some companies didn't file and then said to us, well, we don't need to file because we fall under an exemption. And we just want to make the point that if you are exempt, if you're conducting a relevant activity but you are exempt, you still need to make the filing. And very importantly, you need to provide the right evidence that the ministry is asking for to justify the exemption. So very important, if you're going to claim an exemption, to look at the guidance in terms of what's needed, what's required to be sent. Because if the evidence isn't there, we will come back to you asking you for clarification, and the ministry may even fine you for making an invalid filing. We have noticed that a lot of filings that have been made and accepted, people then want to make amendments to. And it's quite complicated technical area at the moment in terms of which filings can be amended and which ones can't. So always best, we think, to email at ESR@Rock Icc to let us know that you're wanting to make a filing amendment, and then we can discuss the most appropriate course of action for that filing, because once the filings have been approved, it may not be possible to amend that filing without other work being done in the background. So please discuss any scenarios with us. I need to very importantly make the point that Rock Icc has no control over the administration of penalties, or whether penalties will be applied, or whether appeals will be successful. Of course, we'll support you in any way we can in terms of ensuring the correct filings are in place, but it isn't us that you need to justify the situation to. It will be a ministry decision. And this is the most important area, and I know that the team of panelists are going to discuss what is adequate in terms of employees' expenditure and physical assets, because there's no straightforward answer to this. But all I want to highlight is the need to consider the answer to these questions very carefully, because if you do submit a declaration stating that you've had ESR but you haven't got sufficient qualified employees, expenditure, physical assets, there's every chance that you will then incur a penalty. So obviously provide honest answers to these questions, but bearing in mind there isn't any specific guidance as to what's adequate at the moment, do think carefully about how to respond on this. Thank you. We're here to learn about solutions. You want to know what you can do to make a Rock Icc company meet economic substance. And the first and obvious and easiest that suits most circumstances, and particularly for holding companies, is outsourcing the arrangement to the registered agent. If the registered agent can't provide the services, then outsourcing to some other organisation that's based in the UAE. One thing I will point out is the need for that outsourcing arrangement to be documented and evidenced. So if you've got an arrangement with the corporate service provider to provide economic substance, very advisable to have a formal arrangement and agreement in place. A Rock Icc company can't trade in the UAE and can't employ people directly in the UAE. And that's when you might find that a premium product is appropriate, that the Rock Icc company can have a subsidiary at Rackez. That subsidiary can employ staff, obtain visas, and obviously very importantly have the office infrastructure that's needed, and will meet economic substance. Or if you want to maintain the same legal entity, you could operate a branch of the Rock Icc company through Rock Icc. So those are the solutions, and I know the team are going to talk about the advice that they've given clients in respect of solutions for ESR. Just to emphasize that ESR is an ongoing situation, when you complete a service request for a company renewal for Rock Icc, we're asking you to confirm to us that the UBO information is up to date, which obviously is a separate topic from today's webinar, but very importantly that the company has considered its ESR situation and either will have made the filings that are due or will be doing that in the next 6 and 12 months period as required. So every Rock Icc company needs to consider its ESR on an ongoing basis. And just to repeat that and re-emphasize that, please keep an eye on those filing dates to make sure you're filing on time. Please not leaving it till the last minute. I don't think any of us want to 31st of December 2021 like we had 31st of December 2020. Plenty time now to get the filings in, and please do use the whole year to make the filings within the appropriate deadlines. I think that's it from me. Very happy to hand over to Brian, and of course we'll look at any questions that you may have specifically relating with Rock Icc. If we don't deal with them on the webinar today, don't hesitate to get in touch. You've seen the ESR mailbox that you can use to do that. So thank you very much.
Thank you, Alan. Brian, over to you.
Thank you very much, Lara and Alan. And just like to say, first of all, thank you very much for inviting us to speak today. It's a great pleasure to be able to do so. And it's great we've got so many participants because we've got a very good turnout this morning, which is great. Before I start, I'd like to introduce my colleague, Verona. Verona and I have been dealing with ESR since the new regulations were introduced, and in particular over the past couple of months, Verona has been assisting businesses with making their notifications, making their reports, and it's really the practical experience that we've gained in doing that we want to talk about today. So what we want to talk about today is, if we go on to the next slide, the common mistakes we've seen, the things that happen again and again, and based on that, some tips when you're doing these submissions and reports. Best practice, I like to call it, but really it's just common sense, things that you can do to help yourself. And also we will have a look at the penalties, because as Alan mentioned, unfortunately a few people have got penalties. There are things that you can do, probably should do, particularly if you've got a penalty wrongly where you shouldn't have had it. And there have been a lot of problems. As Alan mentioned, we had a few changes last year. Originally everybody was going to do their first notification in the middle of the year, and lots of people did make notifications to Rock Icc and other licensing authorities, and then the law changed and those notifications had to be redone and sent to the Ministry of Finance rather than Rock Icc and the others. So there has been a little bit of confusion, and that's what's caused, I think, some of these errors that we've been seeing. Anyway, Verona will take the first part, filing mistakes. I'll hand over to Verona now. Thank you, Verona.
Thanks, Brian. So I'll just run you through the common filing mistakes that we have noted. The first part is just actually a reminder that there are two submissions to be made if ESR applies to you. The first one that you need to think about is the notification. It's important to remember that all licensees undertaking relevant activities are required to file the notification, even if you do not earn any income from it or you're applying for exemptions. Alan touched upon the exemptions part earlier. Exemptions need to be approved by the regulatory authorities, and you will need to submit the relevant information. It doesn't apply automatically. Licensees earning income from any relevant activities reported within the notifications, and you did not apply for any exemptions, you will need to make a second filing of the ESR report to confirm to the authorities whether or not the ESR test for those activities during the year. The ESR report is due 12 months from the end of each financial year, and not filing this will mean that you get a penalty of 50,000 for the first financial year. Coming to the next common mistakes that we normally notice, it's with regards to the reportable periods. It's important to remember again that this ESR would apply to financial years commencing on or after 1 January 2019. If you do not have a financial year, you are looking at your anniversary of your trade license. But please check your articles of whether or not you have a financial year, even if you did not prepare audited financial statements. With regards to the financial years itself, oh, sorry, Sarah, can you go back? The common mistake that we have noticed is that either people were considering financial years that ended after 1 January 2019, or they potentially have fast forward into 2020, because the deadline was 31st December 2020, and we see a couple of clients filed the notifications for year ended 31st December 2020 and have completely forgotten 2019 itself. And also to remember that you're required to assess the relevant activity for each period. So I think Ellen touched upon this earlier as well. For each reportable period, you will need to assess whether or not the activities will perform. Substance over form approach, and what applies to 1 year may not apply for the next. The next common mistake we see is when you fill up the notification and the report, they will ask you to define the regulatory authority assigned to the relevant activity. With regards to Rock Icc companies and free zone companies as a whole, it's fairly straightforward, where you will identify the free zone authority itself. However, if you have a mainland company, it gets a bit tricky, especially if you have a finance or investment fund management business, where the law actually defines the regulatory authority of these finance to be the central bank and the investment fund management to be the Security and Commodities Authority. This generally will apply even if you don't have a license or any document issued by the central bank, for example. The next common mistake that we have noticed is multiple notifications for main company and UAE branches. This came out of possibly the law change, because when you have submitted the notification in June 2020, the previous law did not define that the main company and the UAE branches are considered one and the same. This was later clarified in the change in the legislation, where now if you have a main company and UAE branches, for one notification and one report, and you report the branch's activities within that same notification and report itself. So another common mistake we have noticed was people were submitting multiple and therefore requiring to address all activities or the similar activities to different authorities. So the next common mistake that we have noticed is specifically for distribution and service center. The reason why is, I would say that this is one of the most common relevant activities that will apply to most people. But what is important to remember is that for the definition of distribution and service center business requires transactions with foreign connected persons. So if you're not part of a multinational group of companies, it is highly likely that this relevant activity would not apply to you. What we have seen people considering is distribution and service center in a layman language could be considered a trading or, say, for example, a consultancy business, where people simply consider, I'm trading, so possibly I'm a distribution, and therefore in the urgency of submitting the notifications, they have indicated distribution without considering the actual definition. So it's important to go back to the MOF website, consider all definitions before identifying whether or not a relevant activity is performed. The next mistake that we have noticed is duplicate notifications and reports. This mistake could possibly also be through some technical glitches that we have noticed towards the filing deadlines. So if you filed your reports towards 31st December, which was the first deadline, there was a lot of lag within the MOF website where you may not be certain whether or not that notification or report got filed. So because of this, you could potentially have generated a second notification for the same company, and however submitted only one report against one of the notifications. How the system works is that it will identify you have two notifications but only one report submitted, and therefore you could potentially be penalized for the non-submission of report on the duplicate notification. So if you have done this, it's important to go back to your Rock Icc and tell them that you have filed a duplicate notification and ask them to cancel the duplicate itself. It's not an automatic thing that the system will pick up and identify. You need to reach out and to cancel any duplicate notifications if submitted. And lastly, it's important to remember that it is an annual filing. You need to assess this annually for each financial year. You should not consider that it's a one-off, submitted, done, dusted, and forgotten. This will apply to every financial year moving forward, and you will need to assess this annually. I'll now pass on to Brian, who will take you through some tips as well as penalty circumstances and the penalty appeal procedures.
Thank you, Verona. We'll start off with a few tips. These are really straightforward, but I'll tell you what, they make a difference. The first suggestion is make sure you keep screenshots of the acknowledgements you get for your ESR submissions. It may seem a simple thing, but it's very important. We have seen in this first round of submissions that businesses had apparently done everything they needed to do, but post-submission, the reports were deleted and that ended up with them getting a penalty. So don't know why that was, probably just a glitch in the system. But if you've got a screenshot to show what you've done, it does help when you want to try to get the penalty removed. The second thing, give yourself plenty of time. The portal is new. Everybody tries to submit their data at the same time. So if you can give yourself time, it is an awful lot easier. One little glitch that we noticed, there is a button for a request for amendment. Now, if you touch that button, you don't actually get an automatic notification there and then, but the message will have been sent to the regulator, and therefore they will be waiting for something from you, which, if it doesn't come, could again result in it appearing that you haven't done everything properly and getting a penalty. I think the point is the portal is a little bit sensitive at the moment, so don't click things unless you really want to click them. Finally, when in doubt, get professional help. As Alan said at the start, there is a lot of really good information on the MOF website, and I recommend that you use that as much as you can. But if in doubt, get professional help. And one thing that it's worth saying is that Rock Icc and the other licensing authorities have a role in administering the ESR, but they can't make the decisions for you. Therefore, if you need some help with doing that, you need to get that help elsewhere. If we go on to the next slide, which is the penalties and appeals, we've seen penalties, a number of penalties issued. Typical reasons why they've been issued. I think Alan mentioned it. I think Verona mentioned it as well. Some businesses have made multiple submissions of notifications just in case, and that ends up with then one report that doesn't match up to the 3 or 4 notifications that they made, and that's resulted in some penalties. So, when you make the submission, just make one. There have been some systems errors, quite simply. I mentioned before that we have seen some businesses where apparently they have done everything right, but for whatever reason, it hasn't been properly recorded in the portal. And of course, we've seen penalties where people actually haven't submitted the report or notification. We haven't seen any penalties yet for anybody not meeting the tests, but I think that's simply because it's so early in the cycle. We haven't got to that point yet. Now, if you do get a penalty and you want to appeal, it's a relatively straightforward process. You might want to get some advice and assistance with it, but effectively you log into the portal, go to your dashboard, and you will see there that there is a penalty recorded if you've had a notification of a penalty, and you have a button that says file appeal. Now that will allow you to then make your case, upload any documents or evidence that you want to do, and then press submit. So it's a relatively straightforward process in the portal itself, and when you do that, it will generate an automatic acknowledgement with a reference number for your appeal. A word or two about timelines for the penalties and the process. It's worth saying though that at the moment we haven't had the final cabinet resolution with the appeal mechanism. So some of the rules are not entirely clear. One of the things that is important is that you make the appeals on a timely basis. Based on what happens with, say, VAT, I would suggest you make it as quickly as possible, but certainly within 30 days. We did have one client where the FTA mentioned 45 days, but there doesn't seem to be any written logic for that. So do it as quickly as possible. I would say definitely within 30 days. And just to mention, it is the Federal Tax Authority that will be dealing with the enforcement and the penalties. So we have a strange situation with the ESR where the Ministry of Finance is the one who is collecting the notifications and the reports. We have Rock Icc and the other licensing authorities who are doing some of the administration, and we have the Federal Tax Authority, which is doing the enforcement. So various things you can appeal against. For example, if you didn't commit the error, so straightforward thing, it's wrongly issued. The law suggests you can appeal if you believe the penalty is not proportionate. We'll see how that goes in due course, of course. And you can appeal if there's a mistake and they've raised the penalty above the prescribed limit. Once a penalty is filed, and very importantly, the penalty is paused until the matter is resolved. So that's all we're going to say about that now. So I will hand over to Alejandra, who will take us through the next stage. Thank you very much.
Thank you, Brian. Alejandra.
Thank you very much, Brian, for this brilliant presentation on the most common mistakes that you have seen, and also the potential consequences regarding the penalties that the authorities can impose. Thank you to Lara and Alan also to invite us to share our experience regarding economic substance regulations. I've been working on this matter since this regulation has been implemented in the UAE, and I've been advising clients on how to try to comply with the economic substance test and try to put in place a certain number of things in terms of corporate governance to ensure that once we will reach the moment to file the economic substance report, at that moment, the clients will have the necessary information and documents to demonstrate to the authorities that they have met the economic substance test. Of course, as Brian mentioned earlier, right now it's a bit early to see how the authorities will decide at the end if the economic test was met or not, because we just started, in fact, to file the economic substance report. Okay, so that's the reason why for the moment we are still waiting the first decisions, especially regarding the eventual penalties when the economic substance test was not fulfilled. And of course, we have a lot of things to learn from the upcoming decisions of the authorities. But the idea of the presentation of today is to remind what are the requirements linked to the economic substance test. And then I will present you some examples and explain you what I've been recommending to some clients. Just please keep in mind that each case is different, okay? And you need to check if in your specific case, you have the adequate and sufficient physical presence in the UAE, because it's not that you have standards that will apply to everyone in the same way. It will depend on the level of activities, it will depend on the level of incomes generated by the activity, and then it depends what you put in place to demonstrate this adequacy and sufficiency in terms of physical presence in the UAE. So let's start with the economic substance test and what you should take into consideration. So what is important here is that you have like 3 different tests within the economic substance test. You have what we call the effective management in the UAE. We have what we call the adequacy substance and presence in the UAE that should be demonstrated through having adequate number of qualified employees, eventually physical office in the UAE, and operating expenditures. And the last test is related to the core income generated activities performed in the UAE. What does it mean? It means that if you are performing a relevant activity with your UAE entity, this activity should be performed within the UAE. Okay, so just because sometimes can be a bit, the way that is redacted can be a bit confusing. Lara, thank you. So here I try to summarize these 3 different criteria. So in terms of effective management in the UAE, what we are talking about? We are talking about directors present in the UAE, managing the company from here, and holding the board meetings, in fact, within the UAE, okay? And how you will demonstrate that is by having the minutes of the board meetings showing that the board meeting took place in the UAE, and making sure that the directors were present during those board meetings. Regarding the adequacy principle, what is important is just to keep in mind that you can have fluctuations during the year, okay? And the thing is, you need to adapt. It's not because, I don't know, you have, for example, 2, 3 employees at the beginning of the years, then someone has decided to resign. You didn't replace this employee immediately, you replace it after 6 months. Still, it can be fine as long as it's possible to demonstrate that you had enough employees to conduct the activity and generate the relevant income with those employees in place, okay? So this is, again, very important, because at the end, the authorities, they will have a pragmatic approach regarding the fluctuation, and they will see the overall situation, okay? So just keep in mind that what is important on your side is to monitor the situation and to adapt yourself according to the circumstances surrounding the way that you are conducting the activity. The last point is regarding the relevant activity conducted in the UAE. This activity can be performed either by employees or eventually the directors of the company. Again, what is important is to have the supporting documents to demonstrate that this activity has been conducted in the UAE. And one of the ways to do that is, for example, if you don't have employees, but there is a director perfectly competent to conduct the activity, And there are board meetings, there are minutes demonstrating that he took actions to perform a certain level of activities. There are contracts signed by him, and the contracts have been signed in the UAE. And these are good signs that the activity has been conducted in the UAE. So now, what is important is just, as I mentioned, keep in mind that what is valid for a company maybe will not work for your company, because it's not that there is just one way to meet the economic substance test. It will depend of your case. Okay. Right now, I will present you some of the cases that I've been facing over the last couple of months. The first case is related to a pure holding company registered in Rock Icc. So in that case, very simple company with one owner, director, shareholder of the company. The owner is living abroad, in fact, and he has this company just holding participations in one company and receiving dividends annually. And the thing is, when the client came to see me, the first reportable period was already done, and he was like, okay, so now I just need your assistance to file the notification and economic substance report. I understand that I fall within the scope of this regulation, so just assist me with the notification and the economic substance report. I was, okay, perfect. I will need a certain number of documents to help you with that, to review, to do the notification accordingly. And then, in fact, when he provided me, when I asked, in fact, the documents, he said, look, in fact, I don't have financial statements. I don't have neither evidence of the expenditures. There is no minutes of the board. And in fact, I don't really maintain records of the company. The only thing that I have is, yes, my corporate service provider agreement in place. And normally, you know what? They are the registered agents. They're providing the domiciliation of the company. I have an account manager taking care of my company. When I need something, this person is taking care. I was like, perfect. This won't, eventually, we won't have the necessary documents to demonstrate that you have enough physical presence. So now we have to check what we need to put in place to correct the situation, because I'm not sure, first of all, that for this first reportable period, the authorities will consider that you meet the economic substance test. And in any case, to make sure that for the second reportable period you will meet that test, maybe we should change a few things and make sure that you have everything in place for the second reportable period. Okay, so what we have done is, first of all, we hire an accountant to prepare the financial statements of the company. It was very simple because there was almost nothing, but like that, it was possible to demonstrate what was the financial transactions of the company during the year. And then what we have done, we have contacted the service provider because, of course, in that case, there was an outsourcing, and the service provider was providing the domiciliation of the company, and they were also providing one person who was not a full-time employee of the holding company. Okay, just to make sure, because this person working for the service provider is handling, I say, 100 companies at least. And the thing is, you cannot have, in that case, just one employee from a service provider dedicated full-time to your company unless you're paying this person for that. So in that case, what we have done, we had requested a confirmation from the service provider, confirming, first of all, that they have provided the domiciliation with the physical presence in the UAE. And we requested also a confirmation of the number of hours dedicated to this specific company per month, in order to complete the economic substance report accordingly. And what we had also requested is if it was possible to do an addendum to the corporate service provider agreement to make sure that this will be reflected moving forward for the next couple of reportable periods. So it's always important to make sure to keep the records of a company properly, and to make sure that you have sufficient evidence to demonstrate the adequacy and sufficiency of the physical presence in the UAE. The next example is related to a rep office, which was the branch of a foreign company. And here the point was that, in fact, for the first reportable period, there was no employee located in the UAE. We had one director based abroad. This director didn't have the UAE residency visa. He used to come a couple of times to Dubai to arrange few things, but there was no recording of his visits to the UAE. We didn't have any kind of written minutes. We didn't have receipts, for example, of the stay in the UAE to demonstrate that the director came, stay in the UAE for this period of time, and during that period, he took this decision, and provided the services to the parent company. In fact, what happened is, in fact, it was the employees of the parent company providing the services related to the representative office in the UAE. But the thing is, at that time, the level of activities was almost zero, but still there was a small activity with a small income. And because of that, my conclusion is, for the first reportable period, we cannot say that the adequacy principle test has been met, neither the core income generating activity conducted within the UAE. So what we have done is we put in place, first of all, in fact, we organize for the director of the company to come to the UAE to apply for his UAE visa resident. We organized at the same time a board meeting. We were present. We took the minutes. We kept the minutes in our office. What we put in place also, we hired an employee based in the UAE, and this employee has been appointed as manager to make sure that the services will be considered as provided from the UAE to the parent company. And moving forward, it was decided that at least 2 or 3 board meetings will be held on a yearly basis in the UAE to comply with the expectations also in terms of effective management. The third example is related to a trading company with headquarters in a free zone. So here, the point was, we had 3 owners who were also the directors of the company, and they were in fact domiciled outside the UAE. And what we noticed is, in terms of employees, in terms of adequacy for the employees, for the premises, in terms of expenditure, everything looked like in order, and it was not a matter of special concern. However, in terms of decisions, and especially strategic decisions, not only for the entity in the UAE, but also for the group of entity in general, the problem is we didn't have a proper recording through minutes. And in fact, when we discuss a bit more how the decision-making process was handled, usually it was like the owners having like a quick chat on the phone, like, yes, we do that, we do that. And in fact, it's something that was very easy for them to do, but at the same time, not exactly compliant with, in terms of effective management from the UE. And because of that, we discussed with these 3 people to see if any of them could first consider to redomicile and live in the UE. And it was decided that one of them will, in fact, move to Dubai and be the general manager of the company. We have also put in place a planning to ensure that quarterly there will be at least one board meeting with the physical presence of the directors here in the UE, and with at least a quorum of two directors present. And of course, additional board meetings could be handled via video conference whenever it will be necessary. And also it was decided that the legal of the company will be appointed as the person in charge to maintain properly the records of the company, and make sure also that this person will be present during the board meetings to record, in fact, the minutes, and make sure that there will be written evidences of the strategic decisions that will be taken during those board meetings by the directors of the company. So again, these are few tips. Again, you need to check your specific circumstances to see what will apply for you. But one of the biggest challenge that I've been facing is when I was asking for documentation to support the fact that there was adequate and sufficient presence in the UE. Maybe I didn't have the sufficient documentation. So again, it's not a question of just achieving, it's a question of demonstrating. And for that, it's really important to maintain proper records of the company.
Thank you very much, Alejandra. Very informative indeed. We have few, actually we're on time, but we're gonna take some questions from the audience. I know that Alan has answered some of the questions, but let's have a look and see. We have a question on a holding company. If a holding company only receives dividends, is it a must to have a financial report? As last year we applied for ESR without the financial report, as we just prepared the letter with expenses and receivables and had it signed by the director. Maybe Alejandra, can you answer this question for us, please?
Yes, sure. Thank you very much. At this stage, it's difficult to say if a letter explaining what has been the expenses and receivable will be enough from the authority perspective. It can be the case, okay, but what the authority normally is expecting is to receive financial statements. Of course, for a Rock Icc company, it's a bit, I will say, not usual, as normally you don't need to provide financial statements on a yearly basis to the Rock Icc authority. And eventually, as it's not mandatory by law to have this audited financial statements, for example, provided to Rock Icc, the authority for the economic substance regulations will consider that providing a letter explaining what has been the expenses and what has been the receivables, as long as you have also eventually some additional supporting documents, like the resolution for the distribution of the dividends, like also, I don't know, the bank statements of the company showing what has been the transactions of the year, might be eventually sufficient. But I will say that to avoid any misunderstanding, and honestly, I think it's not so expensive, appointing an accountant to have proper financial records would be, from my perspective, the best practice moving forward.
Thank you. Another question about the relevant activity. If a company falls under the relevant activity of holding entity, but does not have any core income generating activity in the UAE, how should that entity notify itself?
So the question is related to so either you have an income generated from the relevant activity or you don't have an income. Okay, so the point is, if you receive an income, you will need to notify and you will need to comply with the economic substance. If you didn't receive an income, for example, because you didn't receive any dividend, any capital gain, any kind of revenues, in that case, in fact, you haven't generated any income. And in that case, the notification should be sufficient, but there is no request to file the economic substance report.
All right, thank you. For one-person companies, are board meetings still required? I don't know who would like to answer this question. Maybe Brian or Verona. You're on mute, Brian, or Verona. Whoever wants to answer this question.
Okay.
Are you taking this or should I?
Okay, sorry, we got there the same. Verona, carry on.
Sure. For one director companies, normally what we advise our clients is to submit a letter telling the authorities that you only have one director and therefore a meeting is not possible. But that director should be present in UAE in making key decisions in connection to the core income generating activities. So it's about documenting these decisions and presenting it to the authorities itself.
Yeah, I think it goes back to what Alejandra was saying earlier. You need documentation to demonstrate, what procedures you have in place and to show that you do actually have effective management, even though you just have the one director. Just explain how it works.
Sure. Thank you. We have lots of questions, actually. And I'm conscious of time. I'm sure we're going to revert to you with the answers following the webinar. But I just don't want to delay the attendees any longer. I will wrap up. I'll just give everyone, a minute for their concluding notes. So please, let's start. Maybe Alejandra, if you have any comments before we close the webinar.
If you need further assistance, please do not hesitate to discuss your personal circumstances, either with an accountant, an auditor, a legal consultant. We are here to help you. And as Alan mentioned also, there are a lot of information accessible on the website of the Ministry of Finance. And it's really, I think, useful for anyone to have a look and then contact eventually a specialist to assist you to understand how does it apply to your special circumstances.
Thank you, Alejandra. Brian and Verona.
Okay, I won't say very much. I will echo what Alejandra said because I think that is very, very good advice. The Ministry of Finance website is very good. There's some really good information there. The most important thing is have a look at it, address the issue, don't go missing those deadlines.
Thank you. And Alan?
And for me, just emphasising exactly the same point, we've got a designated email box, esr@rockicc.com. By all means, send your questions in there. When you do, the first thing we do is look at the ministry website to find the answers. So, the answers are there. We're obviously willing to give as much advice as we can, but you may need to get the professional advice. So I'm very grateful for Brian and Alejandra joining us today. Thank you.
Thank you.
Thank you.
Thank you again. I also want to thank our speakers for today for joining us. Thank you everyone for attending, and apologies if we did not answer your questions live in the webinar. We'll definitely get back to you with the answers following the webinar. Thank you again and have a nice, good day, the rest of the day. We'll speak soon. Thank you.
Thank you. Goodbye all.
Thank you.
Bye-bye.